The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the day like we usually do, taking a look at the DAX. And I think the main chart to look at, we posted the 15-minute chart that shows the sell-off from the opening. But if you'll look at that daily chart, folks, we've made a potential double top up here. And as you can see, that is a doji so far today. Of course, it could reverse and close into new high ground. You know, once again, we made a slightly higher high, just marginally. But it is a possibility of a double top, and with the key word there is a possibility. So we'll know more about that probably by Friday or Monday would be my guess, but that's something to pay attention to. These double tops sometimes act like magnets, but we'll have to take a look. We're over this major Dow thing with this Bradley stuff, but we'll cover that in just a little bit. What I'd like to cover now, folks, is something a little bit different, and that is we're going to talk a little bit here about money. Because every time you're doing any trading in these markets, and I'm talking about the futures and Forex, stocks are a little bit different because the margin on stocks is a little different. But with the futures market, and the euro that I'm looking at here is the euro futures. The foreign exchange markets, because they're basically unregulated, they can do anything they want with margins, and they have these mini contracts and micro contracts and stuff like that. But just talk about money here for just a minute. The E-mini S&P is the one that people seem to be attracted to, much like a black widow spider. But if you look at that E-mini, you'll see that the margin on the E-mini is roughly $5,000. And if you have each point in that is 50 points, it's trading for 2,500 roughly. So you're looking at something around $125,000 that is worth $125,000. Pretty much the same thing with the Nasdaq, a lot less, of course, in the E-mini Dow Jones. But take a look at the euro. The euro is a $100,000 contract. And if you look at that, it's only at 23.10. Look at the day trade margin on the euro, folks. It's only $586, folks. That's a really, really low level. You look at it compared to the Nasdaq and the E-mini, and it has better volatility. Another one that is better than the E-mini is the gold. You'll look at gold. It's trading for what? For $128,000 today, gold, and the margin on gold is 1369 day trade margin, and believe me, it moves much more volatility-wise than any of the others. Even crude oil is a great value. You know, the crude oil contract is worth basically $50,000, and you can trade it for $900 for intraday trading. The bonds are another one. Look at the bonds. The bond contract is over $100,000. Margin is $3,300 on a full margin. Day margin is $838. That's a really good, risk to reward. So the two things that are not the best to trade are the E-mini and the Nasdaq on a dollar value bet. That's what we're looking at. Some of these things a lot of these things we're going to be covering with my good friend John Jameson when we do our webinar on October the 16th. It's really going to be a lot of fun, and we're going to talk about the probabilities of which days of the week are the best to trade, either long or short, and some of the statistics behind this that goes back a very, very long way, and it'll be included with harmonic numbers also. Let's take a look at the markets where we are today, folks. We'll start out with the Dow Jones Industrial Average along with the old Bradley model, because when the pedal hits the metal, we are here today. This is it. The full moon is tomorrow. We have the big full moon today because Mr. Winsky, Norm Winsky from AstroTrend, will be our guest at 9:30 today. He always has some great information for us. But as you can see here, we're right over this Bradley date. We've got a gap up on Monday, a gap up on Tuesday, and we're setting up here. Whether that's going to mean anything or not, I'm not really sure. But boy, this thing is mother, God, and country the way we're looking at. Just take a look here at the leader of the pack during this time has been the gold market. And Larry, just a minute. We have to take a judge's ruling here. The leader of this market all the way has been the Nasdaq, and if we look at it, this is a daily chart of the Nasdaq, and we're going to bring it up here two different ways. I want to show it to you two different ways because I think it's relatively important. You'll see this is that 135 pattern. Folks, this has really great symmetry, and I just want to show it to you in a little bit different way. If you'll give me a second, I will post it up here so you can see it. I'm going to show you and put in the ranges of this so you'll see what we've really been doing in the market for quite some time. You'll notice that there's that 135 pattern again from high to high. 1, 3, and 5 are all equal. We still haven't taken out 612. 6012 in the Nasdaq. It has not made a new high from way back on August the 30th. So this has been in the same range basically since July. Now we've gone, a lot higher, of course, in the S&P, and we've gone higher, of course, in the IWM and also in the Dow Jones, but the Nasdaq, which has been the leader all the way, has been lagging. And the primary reason for that is the bearish patterns that we see in Amazon and also in the Apple. Apple is also one that looks very bearish, from a technical standpoint with the head and shoulders pattern, and we have the same pattern pretty much with Amazon. They're very, very close. Now these things could turn, of course, and go up forever, but that's the main thing. We've got another one that we need to pay attention to. There's a whole bunch of them this morning that I'd like to cover before we get to Mr. Winsky, and we'll take a look at this one. But the next one we want to take a look at, of course, is the gold market, because we believe the gold market is still heading down towards this level that we're looking at, which is around 1,245. Wow, Arch Crawford talked to us about the other day that the support that he's looking at from that level, and I believe Bill Meridian also thought that level was going to be a pretty interesting one to look at. I have to double check that. So we'll see what was on. Yes, the Apple made that 382 retracement yesterday at that almost 155 level, and it certainly looks like it. Excuse me. It wants to go. 1 second, please. 1 second, please. Okay, hold on. All right, we covered the gold. I wanted to show you what gold has did over the last couple of days, because if you look at this gold, when we talked about the margin involved in trading gold and the volatility, look at this, folks. From the 29th of September, just 3 days ago, wow, it's a week ago, you'll notice that the market went from 1294 all the way down to 1271. Folks, that is $2,800. When have we seen a $2,800 move in the S&P? I think the night of the rally of the election. Look at this. The market rallied $1,400 in 1 day, just going up to the 61% retracement. Now, if you look at those two red lines, those are exactly equal. That means it's rallying $1,400 each time it rallies. So watch it close. Take a break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to talk a little bit here about the Treasury bonds because we had a very interesting moment just a little while ago. We hit that exact 382 number that we've been looking at for the last 3 days at this 153.06. That was it, spot on, 153.06 so far, of course, but it's backed off, about 12 pips from there. But it's a very important number because if we close above that 153.06, it means that this scenario that we're looking at in bonds could change a bit. But right now it looks like we're looking at higher interest rates and not lower interest rates. That's one thing that we've said here for a while. Whether this is going to keep happening or not, we'll have to wait and see. Now, we've had a question about the Bradley model, and fortunately we have Norm Winsky on today, and Norm's his specialty, of course, because he studied the Bradley model very, very extensively. And in fact, he was using it long before I ever found it, and I didn't find it till 1986. So he'll give us an idea, and it's related to the retrograde motion of some of these planets, and maybe he'll be able to answer that question. That'll be the first question we pose to Norm this morning when he comes on. But I did speak with him yesterday, and his model is in a sell mode, so we'll watch it very, very closely, and we'll see what's going on. Anyway, we'll see what's happening here quickly, and then we'll move on to the next one. But watch these bonds very, very closely. Now, those of you that trade grains, we're at the proverbial moment of truth here in the grain market for several different reasons. One of the main reasons, of course, is we're over the harvest moon, which is the full moon here. And if you'll remember, the move started when we had this really bad problem with the Minneapolis spring wheat during July, and of course it topped right during the crop failure that was supposed to happen, and then it looks like it never really happened. But if we look at the Minneapolis wheat right now, you'll notice that we are setting right on a very, very important number at $608 per bushel. That's down $2.50 per bushel in Minneapolis wheat. We're setting right at the 78% level. We hit it yesterday, hit it Tuesday, and then also Wednesday. It's also a 3-drive pattern. This is going to be it's really important support here. And not only that, but we're right over this lunar, the full moon, and the wheat moves very, very accurately with full moons and new moons. They're short-term cycles, of course, but it's a good short-term trading spot to look at for timing. And that's when you add the patterns and the time together, you try to come up with something that looks like it's going to be at least give you a better idea of what's happening. Now, if we switch over to Christmas wheat, this is Chicago, December. You're going to take a look at this. You'll see that we have a little more bullish pattern, and the reason for that is you'll notice with the Chicago wheat that you're looking at a market that's made higher bottoms. The last one we made just yesterday, we made a 61% retracement there. We're trading about 6 or 7 cents higher than that right now, but that is very strong support at that 435 level in the December wheat. I believe we're trading around 445 right now. And but that's got a chance to go for several different reasons, mainly because you have the higher bottoms in there, and you also have this lunar cycle that usually works pretty good. And the key word there is usually, because none of these work 100% of the time. There's just nothing that you can find that works all the time. So you just have to pick on probabilities and find the ones that look like they're the best that you can possibly see. We talked about soybean oil just the other day, and we'll pull this up here, and we'll be able to see it in just a second. Hold on one second, and we'll cover the corn in just a minute, Mr. Z, but I wanted to cover the bean oil first because we were looking at this bean oil at this 32.57. We're now trading above 33 now, so it's moved about $350 in your favor, so you certainly wouldn't want to risk anything in the oil if you happen to be in the December oil, because it did hold that 78% level. As far as the corn, I don't have anything in corn that looks even halfway interesting. I believe there's a lot of support on a long-term basis in corn around that $3.40 per bushel level. But remember now, folks, we are in they don't call this a harvest moon by accident, because the harvesting is now started. We're going to have an idea of what these crops are going to look like down the road. And unless we'll see what's going to happen with it, we'll have to just wait and see. But I think the corn has to get above, D's corn has to get above the 360 level, and then I would say, yes, maybe it's got a chance, but I don't see it. The wheat is much easier, Z. That's the key. If you look at Minneapolis wheat, which I don't trade, but my good friend Simonley does, and he follows it very, very closely, and it still has some bullish characteristics, even though, they've basically taken this market that said there was never going to be any more wheat, and look what's happened. It's dropped $2.40 a bushel. And that, folks, is why I look at technical stuff. It don't always help you, but it helps you a lot more than it hurts you. But the wheat looks the best of any of the ones that I'm seeing today. And the only reason it looks the best is because of three things. One, we have the lunar cycle. Two, we have higher bottoms. Three, all three higher bottoms are 61% retracements. So until those are broken, you have a short-term uptrend, so you know exactly what you can do to trade wheat. You only have to trade it for about an 8-cent risk. So you're talking $400 to be a wheat farmer. You don't have to own a tractor. You don't have to own the land. You don't have to lease the land. You don't have to buy the feed. You don't have to go to the bank to borrow money to buy the feed. So it's a lot easier, to be a futures trader. So that's the main thing. By the way, when I talked about those margins and stuff, those margins are set by the exchange, folks, and the exchange is owned by the members of the exchange. So they try to bring in as much business as they can, but their main thing is the protection of themselves. So they want to make sure that the money is there so that they can always transact these things. It's not like some of these things that you have with these derivatives where you have to worry about counterparty risk. The CME has always been able to, match these things up, even though we had a little bit of a problem when we were working with MF Global a few years ago, but it all worked out okay. Better for some than others, but it still worked out. Just like Congress, you protect yourself first, and your customers come second. That's just remember that, because the exchange is there to protect themselves. They've been there for 160 years, I believe, so they do a good job and they watch it very, very closely. Years ago, when we first started trading, this 1975 is when we first had the CFTC, the Commodity Futures Trading Commission, and then in 1978, I believe, the the NFA, National Futures Association, came out. And that also, helps organize some of these. But they're trying to, work with Forex. But Forex does the same thing that the CME does. They try to do a good job of disciplining themselves, and they really do. And these Forex banks, there's basically 13 that run the whole thing. But there's a lot, hundreds and hundreds of small firms that are out there. And that's why you have to be a little bit careful, when you pick a FMC merchant for foreign exchange. But if you pick the ones that are larger, you should be okay. Now I'll get off my soapbox here, and we'll have Mr. Winsky on to talk to us about the markets and especially the Bradley model today. So Norm, if you're listening, the first question is going to be about the Bradley model. Say.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Norm Winsky from Astro Trends on. Norm, are you there?
Yes, sir, Larry. Good morning.
Very good morning to you, my friend. Put on your question and answer hat because we have two questions from our dinners. They're both related to the same subject, and that is the inversion of the Bradley model. You mentioned several times here over the months that we've had you on that you have worked with the retrograde planet movement in order to determine whether there's going to be an inversion or not. Would you be able to explain that phenomenon to our folks here?
Yes, sir. Over the many years, I noticed that as you know, you go along there following the Bradley model, it's working well, and all of a sudden, boom, it flips upside down on you. And I started to notice that this usually occurred at or near planetary station points. What is a planetary station point? Due to the relative motion of the Earth to the other planets, it appears individually. The planets are all traveling around the sun at different speeds. And just like when you're driving your car, and if you're doing 60, your speedometer says you're doing 60. If you glance out your side window there and somebody's passing you doing 70, all of a sudden it looks like might give you the impression that you're going backwards when you know your speedometer says you're doing 60. That's what happens. That's relative motion. And so that's what happens with the planets. So sometimes the Earth is passing a planet, or a planet is passing the Earth, and momentarily it appears that a planet has stopped its motion and then will reverse its direction. That's called a station point. There's two kinds of station points. One is stationary direct, which is when it stops to go forward, and stationary retrograde when it stops to go backwards. At these station points, that tends to be, I believe, some kind of shock wave through the system, energy shock wave through the system, changes the energy, and that can change the polarity of the Bradley model or planetary energy. Another thing that has been known to do that is also when the planets get to zero latitude. As they go around the sun, they also oscillate up and down like horses on a carousel. And so when they get to that midpoint where they're even with the sun's equator, they're at zero latitude. And when that happens, that also has the same effect. Lately, we don't have any station points this month, but we do have Mercury hitting zero south latitude on, I believe, the night of the 18th. And also in the last several months, the moon has been having that effect, although that's not a part of my official methodology because I haven't seen that happen enough times. But we certainly take note of that when it happens like 3 or 4 months in a row. So you want to pay attention to the moon here. And as you've mentioned multiple times, we have the full moon coming up on tomorrow afternoon at 2:40 p.m. Eastern Time. So if the market has been going up here, everything may change on within a day or so of the full moon, and we may start going down because I have unadjusted. My version of the Bradley model has a strong trending factor for most of the month until at least the 18th when Mercury gets to zero latitude. And at that time, we'll have to stop and take a look again and see if there's a possibility that things may reverse.
Norm, I have a question. I know your uncle was one of the first people that worked with Wernher von Braun down at NASA. And was he into astrophysics, Norm? Do you remember? Because you was just a little squirt. I don't know if you even remember that or not.
Well, he was, I don't know about astrophysics. He was the guy that planned the Mercury, Gemini, Apollo programs. He was the first director of spaceflight programs for NASA when they opened their doors in 1958.
Wow. So he must have known something about what was going on in the sky, right?
He's the guy that hired Wernher von Braun.
Get out of here.
No, he was Wernher's boss.
Wow.
He's the top technical guy in all of NASA.
Wow. No wonder you're a smart guy, Norm. Wow. Anyway, let's go on. Fire away. We got a lot. You always bring us a lot of good stuff. So please.
That gene skipped over me, but it could be he grew up in Terre Haute, so maybe you got some of that yourself. With that Terre Haute water.
Yeah, for sure. We lost one of our famous Terre Haute people this past week. Frank Hamlin, the assistant coach for the Lakers, who'd been a coach in the NBA for 40 years, passed away of a heart attack at age 72 in Del Mar this past week. So he was one of our famous people from Terre Haute. So let's move on, Norm. Let's talk about something fun. The markets. Go ahead. You got the mic.
All right. So I have a listing here of all the important events for the week. And we have the moon sort of as a focal point coming up tomorrow afternoon. The full moon that tends to correlate to churns and changes in trend for your greens, your precious metals, and their financials. And so need to pay attention to that, And we have some other events here. We have Uranus to Neptune. Neptune is oil, so we have a potential change in trend for oil coming up tomorrow. We have a whole bunch of things right around the 5th to the 6th of the month, and we'll be getting to what that means for the stock market here in a minute. Mars aphelion, that only occurs about every 2 years as Mars goes around the sun. That's its farthest point from the sun, and so forth. We have Uranus to Neptune here again for over the weekend of the 6th, and that again is a strong indication for a turn in oil. Okay, also copper because Uranus is involved. I'm going to move ahead now to the stock market. I picked two. I'm highlighting two markets that I thought were at probably the two most extreme markets of all the things that I follow, which is, I think the stock market is an extreme point on the upside, and we'll talk about corn here in a minute, which is, as you mentioned, and the greens are at an extreme point to the downside, So here's my stocks. Here's some things on the stock market. I have what I call market math. That's kind of like a Gann thing where there's certain key numbers that you watch in terms of time. And the 6th is 3,136 days. That's 56 squared. Again, like the square numbers. And that's from the March 6, 2009 major low. We also have on my Fibonacci time cycles I indicated the 6th. And we have a whole bunch of stuff, as I showed you there before, over the 6th to the 9th weekend for the planetary stuff. Here's a short-term 10-minute bar chart. For the S&P 500, I have we're getting to the top of these channels here, and in the extreme, if we got a blow off here, we could possibly, on the short term, maybe get to about 25.45. But we're already up about 6 or 7 days in a row now, and the rubber band, I think it's getting stretched pretty tight, right, Larry?
Well, it seems to, Norm, but it's been stretched pretty tight since November the 8th.
Oh, yeah. Oh, yeah. How about that? We had a streak early in the year where we went like 12 days in a row, right? That's only happened like 2 other times in, like 100 years or something,
Yeah. Well, that's what streaks are for.
There you go. And here's a daily chart here. You can see it on a short-term basis. You hit the top of the channel here about the same on the daily. About the same place. If you really got it going here and broke out over that, you might get to the top of the big channel, which could probably get to maybe about 2570, as I guess, But I think we're leaning toward a change in trend here, somewhere in the next 1 to 2 days, And oh, by the way, you were referred to my cell zone. My sentiment indicator is in the kind of the yellow caution light. Just a step or two away from the outright sell, but not there yet.
Take a break here. We're right back with Norm Winsky.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Norm Winsky from Naples, Florida, and AstroTrend. Norm, we have a caller from your home state, from Boca Raton. Peter, are you there?
Yes, I am, Larry.
You have Mr. Winsky's full attention. Go right ahead.
Okay, well, I want this attention to be for your audience, Larry, because as many of us do, we listen to your program. Whenever you announce that Norm is going to be on, we pay attention. And he comes on and he gives us an awful lot of information that we take notes on and that we can follow. And he gives more than probably he should. And I just want you to know that I've been 50 years in the business, and I'm a subscriber to Norm's newsletter. And I have to tell you, I want to give a testimonial that his newsletter and information that he provides on a monthly basis is more information than anyone can possibly use. And if you pick and choose those things that are of interest to you, then there's no way that you can't make a lot of money in this trading in the market. So I want to tell you that I'm a very, very happy subscriber. He does more than anyone that I've ever experienced gives with the information of himself. And I want your listening audience to know that just listening to when he comes on is nothing compared to the valuable information that you receive should you subscribe to his newsletter. And, of course, he gives you that training, which is really the basis of everything that you need. So that's my comment for you today.
Well, Peter, if 10% of that is true, that was really an endorsement, and I happen to know that it's all true. So, Norm, that is a golden feather in your cap, my friend. But that was really nice of you, Peter. And as soon as we collect $20, we're going to send it to you, my friend. But thank you so much. It's better. We really appreciate it. Thank you so much for that. That was great. Norm, you have to have a big smile on your face.
You betcha. Thank you very much, Peter. I really appreciate that. You're fantastic.
Yeah, and of course, Peter's last name is Winsky. I don't know if they're any related or not, but no, I'm just joking. Go ahead, Pete. Right. Go ahead, Norman, to finish your show. We only got a little bit of more time. We only got about 10 minutes, so fire away.
All right, so I thought I'd pick the other market at the other extreme, corn, which is this summer been going down, down, down. And let's go look at here's your daily chart there on the screen now. And we topped out in, in July. And another July, I think the previous year, we had another July high in corn. And we've been going down, 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 and into September low. Now we're in this kind of wedgie formation here. And here I'll give you a little technical class here. For those who don't know, you take the widest part of a wedge, and it's about 15 cents from about, I think, 360 area, maybe 362. I think the widest part is roughly 15 cents. And if you go back, you go over here to the next peak, right over here, and gets to about a little bit lower, and you take that amount and you project that. We're looking at the number you mentioned earlier in the show, which is about 340. So if we could get one more spike down here in the corn to about 340, I think that might set. And we did that near the full moon. That could be a very good thing. Okay, for a possible buy. And I don't think you have I think you would agree, Larry. I don't think you have a lot of downside risk here on this corn. You're getting down close to cost of production, right?
Yes, I believe 320. Simon only told us that 320 was pretty much the cost of production for corn nowadays with the way things are.
Every time I come on your show, I like to come up with something a little different that I haven't done before. So I'm going to talk about fractals now. On the next page, I have my yearly fractal for the corn. So it's based on the January price action. And when you take my class, my free class, I teach you how to do this. So I'm not going to go into the details now, but based on the January price action, I get these blue bars for the entire year. You get the whole year laid out in advance. Look at that. The blue bars said we're going to top out at about mid-year and then have a sharp down into about September. And then somewhere here in late September, then we should get a rally. Okay? So we'll see if that happens or not. But so far, so good, right?
So we have a question. What would trigger a sell in the stock market? One of our listeners is asking that question.
If we make a top out here near the full moon and we start going down, I think we could go down all the way till at least the 18th, 19th, and then we'll have to stop, look, and listen at that time.
That'd be a 10-day. That would be roughly 10 days down.
Right.
So roughly 2-week down move.
Righto.
Okay.
Okay. But I don't know if you, what do you think about this corn fractal? I have these for 27 different markets, and I have them all laid out. Last year in my class, I show you last year's results. Unbelievable, Larry. I know I say this to you. I don't know if you looked or not, but unbelievable on the currencies. It was nailing the high of the year like within a day or two. It's unbelievable. Aussie dollar, Japanese yen, all those.
They're the fun things to trade for sure.
And I published this back in February. These blue bars were published back in February. The black bars I overlaid, that's actual corn prices. Okay, so there we are. We're near the low where we should be making a low, and now we're due to make a high based on this fractal model. Alrighty, so anyway, now I'm going to tell the folks how they get all the free stuff that Peter was talking about. And you get the free class. I have about a 5 to 6 hour class, individual class, and then you get my letter for the month for free, and we go through the letter, and I teach you all the things that I do in the letter. And you get to learn all these methodologies. We learn some astro. You learn some advanced Fibonacci, including Lucas numbers and Lucas mathematics. You get fractals, and all this stuff sounds complicated, but guess what? You don't have to be smarter than a fifth grader to do anything that I do, because otherwise I couldn't do it. All right, so contact me right away, and and we'll get you set up here to get the October letter and get the free class. And and of course, if you mention Larry's name, then you get it's all free with a double your money back guarantee, right, Larry?
That's a good deal. We have a question about the gold market, Norm. You have any feeling about gold?
On my stuff, gold is kind of sleeping this month. Let's see. My only big date for gold this month is I have my calendar here, and that's going to be on the looks like the 10th is a big date for that. That'll be Tuesday the 10th, I think. Yep, that'll be maybe the largest change in trend date for the gold on my calendar. So that's the beauty of my system, is it tells you what markets to look at. Then you don't use your subjective thinking, and you and I both know, Larry, when you start thinking, that's dangerous. Right?
Understatement of the year.
Unless you think in this business, the better off you'll be. You need objective indicators that tell you what to do, and then you follow your indicators. Thinking should not be allowed. Right?
That I agree with that 100%, maybe even more for sure.
There you go. Would you go 110?
Yeah, I'd go 110. That's not a big stretch for me. 110.
All right, so 110 offered at 120.
We don't even have the. Do they do any pit trading at the CBOE anymore?
I don't know.
Norm?
I've been long removed from that. I think most of the humans are gone.
Yeah.
I think one of the few last bastions of human trading is in the options area because some of the option spreads are so complicated that the computers aren't yet up to speed on that.
Yeah, I know they do trading in the corn pit, but not many people know about it.
Anyway, let's get my contact information on the screen there. I'm in Naples, Florida. Telephone 239-594-3939. Email me, Winsky at embarkmail.com, or you can Skype me at norm.winsky. That's norm.winski. Call me right away. I only do this a few times a month in the early part of the month for a few days, and so look forward to helping some of your folks, Larry.
Thanks.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we just had a great session there with Norm Winsky, and always a lot of fun to talk to our guests here. And Norm, of course, has really a lot of information, but as he mentioned, we're over something that could turn into a significant selling opportunity here. If this full moon does slow the market down. We do have a lot of gaps in the Dow Jones, but unfortunately the Dow doesn't get those memos. Watch that Dow, the Bradley model, folks, because we are over that thing with all the gaps up here. The pattern, we got this really unusual pattern with the Dow exceeding by a long margin the distance in the Nasdaq. The Nasdaq has basically been in the same range since August the 1st. first. And here we are in the Dow Jones, where we've moved actually another 700 points up in the Dow Jones. And that's basically, those real high price stocks, Boeing and, all the others, 3M and of course Goldman Sachs. Those are the ones that, push this market up. And that doesn't mean it can't go up, because there's 16 of those that can make the market move. But pay close attention to it. This is a really important cycle time because of this harvest moon. We've got a potential bottoms here in the grain markets, especially in the wheat and in the soybean oil, which has already started to move. That's another one that looks very, very interesting. And also, there's a possibility that we've made a significant top here in the crude oil. So pay particular attention to that one. We're still looking for gold to come down about another $35 down to that. Well, it's only $30 away at $1,245 an ounce, where Arch Crawford feels that we should come into some really strong support, which technically I think he's spot on with that. Also remember that the fear and greed index is at an all-time high. We just went above 90, I believe, today, someone told me, and I'm not sure what that means. All I know is there's a lot of people wanting to buy. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.